Hi, everyone. My name is VADIM TELYATNIKOV. I'm the CEO of ALPHAPOINT, and today I'm going to spend a little bit of time talking about the history of exchanges, what the current state is, and some thoughts about the future. But first, quick shameless plug about us. We power some of the largest exchanges in the world. Some quick stats. We have 18 exchange customers in 15 different countries, and in aggregate, they transact in nearly $300 million worth of trades in US dollars per month. Some of the customers include Bitfinex, who's one of the largest exchanges in the world, MexBT, who's focusing on Latin America, and then Bit, that today launched in beta, that's focusing on the Caribbean. So, as we all know, Bitcoin has been growing really rapidly. It's more or less internationally accepted, and exchanges have a really crucial role in the entire ecosystem. Our view of the ecosystem is relatively simple. Basically break it out in 4 parts. First, you need to create Bitcoins, and that's the role of the miners. They also obviously are the ones that allow people to send and receive Bitcoins to each other. And then after you have a Bitcoin created, that's where the exchanges come in. And they're basically on-ramps and off-ramps to the ecosystem. That's where you go to buy and sell a Bitcoin. That's also where you go for price discovery, basically to figure out what a Bitcoin is worth. Once you have a Bitcoin, now you need a place to store it and a way to spend it, and that's the role of the wallet. So you have retail wallets such as Circle, Coinbase, and Blockchain, and then you have more institutional wallets or enterprise wallets such as Zappo, BitGo, and Cyphex, who you've heard from earlier today. Then finally, after you have kind of the 3 essential pieces of infrastructure, then you have the use cases. The one that's been mostly talked about and been most successful so far is payment processing. And it's no surprise because the value to the merchant is very simple. When you accept payments over the internet, typically you have credit card fees up to 3% that you need to pay. With Bitcoin, none of that exists. Now, I know as Jaron mentioned today, some of that cost is borne by the user that's actually paying and buying something with Bitcoin. But as far as the merchant is concerned, that's a savings for them that goes right to the bottom line. In the future, I think we'll see a lot more applications. You have some interesting ones. ChangeTip, a lot of that focus on micropayments and tipping. A lot of other companies that are focused on remittance, which I think is going to be a very big opportunity. But overall, I personally feel are still missing that killer application that's as simple to explain as when email got created for the internet. Email was very basic, right? You had the TCP/IP protocols, and nobody really knew what that was or what to do with it, but email is something you explain to your grandparents. Instead of sending that letter, putting a stamp on it, waiting 7 days for someone to receive it, you can type in the computer and it's instantly develops. It's instantly delivered. So I think Bitcoin still needs that killer app that's really simple to understand for consumers. So then focusing on exchanges, first the history. This is a graph of the volume normalized to US dollars for the last 2 years, from the period of January 13 to January 2013. And as we see here, it's been pretty good growth. 16 billion overall trades for all of 2013, and more than doubled this year to 37 billion. But what's important to take a look at is to separate where this volume comes from. And the way I like to think about it is trades that happen in US dollars, which is primarily from exchanges that charge fees, and then trades that happen in Chinese yen, which is typically from exchanges that do not charge fees, so it's a lot easier to increase the volume when you're not charging a fee. And as you can see, the lighter red or the pink is the volume in Chinese yen, which is in this year much, much higher than US dollars, coming in at 72%. If we look at just the fee-based volume, we get a slightly different picture, or what appears to be a slightly different picture in terms of growth. 2013, there was 12 billion of transactions, and 2014 is relatively flat, just slightly lower at 11.7 billion. But if we take the peak that you see in November and December of 2013 out of the picture and look at a period between March and October, of last year. You have 9 million of trades per day in last year and $23 million worth of average trading volume this year, which I think is very good growth. So very promising for the future. Now, another way to kind of segment pretty much the same data. So same time period. This chart is now by quarter instead of by month and breaks down the different exchanges, the largest exchanges by market share. As you could see, in the period of basically the first 3 quarters of 2013, GOX, which is in pink, was the clear leader. It hasn't really been a clear leader after GOX's collapse. Since I like thinking of the exchanges separating it from Chinese to US, looking at Chinese exchanges first, BTC China had the lead for the last quarter of 2013, then replaced by Huobi, who had the lead for the next 2 quarters, then OKCoin, then BTC China again. So basically they keep swapping places, and it's very hard to predict what's going to happen in the future as they fight for market share. In the US, you have a similar picture. Again, GOX was a clear leader for a really long time until its collapse in the first quarter of 2014, and at what point Bitstamp took the leading position. But even in the quarter prior, you see Bitstamp and BTC, which is in green, starting to gain a lot of market share. And that's primarily because GOX started having issues with withdrawals during that time period. It was nearly impossible to withdraw US dollars, so a lot of trading activity started moving to the other exchanges. And right now, we have Bitfinex. It's recently overtaken Bitstamp in terms of volume, covering about 38% of all the USD trading volume. So that's kind of the past. What do things look like today? The first chart is market share of the exchanges using data from the last 30 days. As you can see, the top 3 exchanges are in China, with BTC, China, and OKCoin fighting for the leading position, having about 1/3 of the trades each. If you take another look at a similar data by currency, not surprisingly, the Chinese yuan is 77% of the trades, US dollars 20% of the trades. Together, that's about 95% of all the trading volume, so very low volume in the other currency, but I think that will change in the future. Shifting to US, very different picture, and here Bitfinex is in the lead, trading about $280 million worth of coins per month, then OKCoin, and then Bitstamp for the 3rd position. And the last part about the current asking, what I thought was pretty interesting, was what happened to the volume over the last couple days as we saw the dramatic decline in price. Prior to the last week, the trading volume was around $20 to $30 million per day, and there was a massive spike as the price dropped more than 4 times to roughly $80 million per day. Next, I thought it would be interesting to talk about how do the exchanges make money and kind of do some analysis of how much revenue we feel they're actually making. So pretty simple. These are some of the largest exchanges and where their revenue sources come from. They charge for deposit fees, for withdrawal fees. The exchanges that do charge for trading fees, that's when the majority of the revenue comes from. For example, Bitstamp charges on the low end 20 basis points on each side, so they make about 40 basis points per each trade that happens in the platform. There was some very interesting data that leaked about a year ago when GOX collapsed, and part of it was a business plan, so I thought it would be interesting to share. Part of that business plan were their revenues from the period of January 2013 to October 2013. We used, so on the right, you see a table plotting their revenues for each month. Then we took the volumes that they generated and used that to figure out how much revenue they were generating as a percentage of volume. So that's for every dollar that's traded from the exchange, what percentage of that dollar do they take in fees? And that includes deposit fees, withdrawal fees, all the fees that they charge. And then we didn't have data in November, December 2013, or January or February 2014. So we used an estimate from the prior 3 months, August through October, to come up with a rev share percentage of 0.59 or 59 basis points. And basically, that gave us an estimate they generated somewhere around $24 million in 2013, and 3.6 million in 2014 before their collapse. And it's important to point out that out of the 24 million, half of it was earned in the months of November, December, when we had that huge spike in volume. So using that analysis, decided to apply a similar methodology to some of the other large exchanges. So I added Bitstamp, Bitfinex, and BTC, which during that time period accounted for about 90% of the market of the exchange that charged trading fees. And used a pretty conservative estimate. Basically, the lowest fee that they charge in the ladders that they post online for Bitstamp, that's 40 basis points. And when we add up all the revenue in 2013, the exchanges generated somewhere around 42 million. And for 2014, somewhere around 26 million. And the reason for the decline is twofold. First, there was about 1 billion less in transaction volume out of these exchanges for a year, and then Bitfinex has seen a lot of growth but charges less fees, so the overall revenue has declined. So volume is kind of the driver at the end of the day of the revenue from exchanges. So the next question to ask is what affects volume? And one of the main things is volatility. This is an interesting chart that we pulled from a CoinDesk article a few weeks ago. Basically, what it shows here is in the red, you have volume. In the blue, you have volatility. And as you see, these lines move very, very closely together. So that means there's almost direct correlation. So that means when you have big price swings, that spikes the exchange volume. And that's, again, that's what we kind of saw happen in the last couple of days with the price decline. You also notice that volatility has been declining. And I believe that's going to continue happening in the future as Bitcoin grows, as it gets more accepted, as there's more people trading. That's all going to lead to better price discovery and to reduce the volume. So that piece is a negative for the exchange business. The other two things that have been slowing down growth, first is regulation. Basically, the lack of clarity of regulation. I feel like it's preventing a lot of large institutions and entering the space in a big way. About 2 months ago, I had drinks with a president of a pretty large bank and that I knew was somewhat interested in Bitcoin, didn't know how much. We sat down. My first question was, well, what do you think about Bitcoin digital currency? Never guessed what the response was, but he said, I love it. I have miners in my basement. But when we started talking about whether or not the bank is going to get into digital currency, basically his perception is it's super interesting, but the current risks outweigh the rewards, so they basically need a lot more clarity on regulation, a lot more clarity on where the industry is going to go. I think the second thing that was his concern and a big concern for larger institutions is all the hacks that have been happening and all the funds lost. Over the last couple of years, there's 14 notable hacks. This kind of lists the top ones. More than $470 million have been lost. Obviously, the biggest one was due to the collapse of GOX. The second largest one just happened with Bitstamp. And although it was very unfortunate, I do want to say that I think that because Bitstamp uses cold storage and only had a limited amount stored in their hot wallet is the reason why they were able to cover the funds lost, and it wasn't a total catastrophe like GOX. So even though it's unfortunate that the hack actually happened, that's tremendous progress for us as the industry. So I kind of applaud them for that. So finally, I wanted to wrap up and talk about some predictions of what I think is going to happen in the space this year and in the future. So first, I think the future is very, very bright. On this chart, on the left, you see that Forex market trades $5.3 trillion per day. And that's not per year, that's per day. That's massive volume. The amount of volume traded and notional value in the CME is 2.5 trillion. It's 169 billion daily volume in New York Stock Exchange. Bitcoin is 32. So obviously, massive opportunity for growth for anybody that believes that Bitcoin is going to be successful, as I'm sure all of us do. This is what makes up that 5.3 trillion. The pie chart on the blue is the spot transactions, which is basically what drives all the transactional, or most of the transactional volume currently in Bitcoin exchanges. So in the Forex, actually, foreign exchange swaps are more popular at 42%, and there's a bunch of other instruments such as outright forwards, options, and other types of products that are offered that represent basically a growth opportunity for the current exchanges. And it's some of these extra products we've been working on. You've heard recently a number of exchanges starting to offer options or futures, so I think that's going to become more and more prominent this year and kind of in the years ahead. Also interesting to understand how the Forex market breaks down in terms of whether trading activity actually happens. 41% of the 5.3 trillion is out of the UK, 20% is 19% is in the US, close to 20%, and together it's only 60% of the market. There's 50 countries that have trading volumes in Forex of over $1 billion. So again, that's kind of opportunity right now. Obviously, opportunity for the countries that aren't very well represented currently in Bitcoin to grow. So we kind of see that as an opportunity for growth for the exchanges that decide to focus on those local countries. Leverage is another interesting driver of volume just because it has a multiplier effect. First, margin. If I deposit $1 into an exchange, but I have $3 to trade, it's very easy to understand how that will increase the volume of the exchange. Then futures and options are derivative products that have similar impact in terms of volume. And the other thing about these products is they also have great utility. They basically offer a way for people to hedge or basically buy insurance if they're needed. One example of that is, and I think I'm actually surprised that someone hasn't kind of solved this problem yet for merchants, but currently when merchants accept Bitcoins, they typically sell them, and only a few of them actually offer refunds in Bitcoins. And the reason is because they don't want to take the currency risk of the fluctuation during whatever time period that they have a refund policy. So if they could buy a future for 30 days or for 60 days or whatever their policy is to allow for refunds, then they can also offer refunds in Bitcoin. Flexibility of instruments. I think we're going to see a lot more order types coming to exchanges. Currently, there's only two main ones that are prominent. That's market and limit orders. Some exchanges, they start seeing stop loss or trailing stop. NASDAQ, for example, has 17 different order types. So I think we'll see more and more of these type of order types. It gives flexibility to traders, which again will result in them interacting more with the exchanges, which is going to drive more volume. And finally, I wanted to leave some thoughts about what I think is going to take Wall Street, or what Wall Street needs to really get into the space in a big way. There's two sides of this, the way I look at it. There's the business side and the tech side. On the business, and I think it's one of the biggest Achilles heels for the industry, is custody. And that's related to all the hacks that happen. Investors are risk takers. They're totally comfortable taking risks in the assets that they're investing. They're totally not comfortable investing tens of millions or hundreds of millions of dollars when the risk, that there's a significant risk of those funds either getting stolen or the institution that's holding those funds collapsing. So it's something that we really, really need to solve before they get into the space in a big way. And then on the technology, it's mostly about creating systems and ways for Wall Street to talk to our exchanges and our systems in a way that they're used to. And that's basically means standard protocols. Wall Street's used to use things such as FIX, binary streaming to place orders and consume data. And I think, and Jaron talked about this earlier as well, I think you're going to see more and more exchanges kind of integrate these features into what they're offering. So again, to wrap up, I think even though this has kind of been a volatile year, and which we've kind of driven by a large price decline, I think the opportunity is massive and the future is very, very bright. And with that, I really enjoyed speaking to you guys. Thanks.